Well, hello and welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. It's a brand new week and the cues coming out of global markets are extremely positive. We have a lot of cues to watch out for this week, given the fact that we have the RBI policy on the 8th and the central bank is expected to stand pat on rates. And of course, over the next 30 minutes, we'll be talking about the cues for trade, all the stocks in news, and of course, we'll also be getting you, getting all your stock-related queries answered by our technical expert on the show. So if you have any queries, send them in to us on our live feed on YouTube and we will have them addressed. We'll also be touching base with Peter Mcguire of Exim Australia to talk about oil prices, all that in just a bit. But let's take a look at the top stories at this hour. Stronger than expected jobs report for May boosts Wall Street on Friday. Payrolls rise by nearly 340,000 versus an estimate of 190,000 jobs, easing concerns of an impending recession. Dow rallies over 2%, making its best day since January, while the Nasdaq gains for a sixth straight week to hit a 13-month high. Asian markets trade largely higher following a strong Wall Street rally on Friday. The SGX Nifty is also indicating a higher start for the Indian market above that 18,700 mark. Oil surges as Saudi Arabia announces production cut to the tune of 1 million barrels a day for July, taking its daily output down to 9 million barrels. Brent trades above $76 a barrel. The OPEC, however, leaves its production targets for the rest of the year unchanged. Stocks in focus today. Insurance regulator identifies SBI Life to acquire Sahara India life insurance policies in a bid to protect interests of policyholders. Also in the spotlight today will be Wipro as it sets its record date for buyback and Mahindra Corporation. The Railway Board recommends a CBI investigation into the tragic Coromandel Express train crash that has till now claimed nearly 300 lives and left over 1,000 injured. Railways Minister also indicates that the root cause of the accident has been identified and will be released soon in a report. Well, without any delay, let's bring our guest on board today to talk about, the outlook on crude prices after what has happened with the OPEC meet that rather took place over the weekend. We are joined by Peter Mcguire, CEO Exim Australia, to discuss, how really the crude prices are poised going forward. Good morning, Peter. Thanks a lot for joining in. He, of course, is joining in live from Sydney this morning. Peter, Saudi Arabia pledging another 1 million barrel, cut in output after the surprise cut we saw in April. Are you surprised because the markets were expecting a status quo or thereabouts?
Well, good morning, Nandita, and greetings from Sydney. Now, I'm not really surprised, and I'll tell you why. I think when I digest the market and what's happened over the last couple of months, there is no doubt in my mind that the Saudis, and they say it quite openly, they're really after that $80 plus, 85. And considering what's happened with the US dollar over the last 6 months from 114 for the US dollar index back to the best part of 104, it's had a big washout. And that's really impacting if you're getting paid in US dollars for your crude in petrodollars, then there's less bang for your buck. And there is no doubt that that 1 million barrel cut is their way of trying to get a higher price. And as the Saudi prince came out, the oil minister in the last week said, if you're on the short side and you're trying to play this from a speculation standpoint, you're not going to like how it moves forward. So I think that was the warning. You gave everyone a warning. And that I wouldn't have liked to have been short in the last couple of hours.
Right. Peter, last time we saw a surprise cut coming in. The crude prices surged to as much as $87. However, they weren't really sustainable. They came back to levels of somewhere around $72 to $73. Do you think this time this output cut will manage to prop up prices? Or do you think it's the dwindling demand rather that would weigh in on prices again?
Well, at that time when that happened, I take on board as far as the calendar year, and you were just coming out of, the lockdowns in China and the end of COVID, and we were talking more in that March sort of time frame. Now you're talking summer driving season in the States. We're in June, and that's traditionally the busiest time for transport and, of course, demand picture. And people are on holidays and they'll be driving across the states because we couldn't do that for a number of years. So I'm expecting more consumption. The other side of it is, yes, I won't be surprised for it to hit back up to those sort of targets. Now, it's too hard to say whether it's going to do it in the next week or 2 weeks, but I think the overall fundamentals are going to push it higher from here. And you're also looking at the other side, which is the geopolitical concerns, the Taiwan situation, what's going on with Ukraine still. And I take on board the weather outages that traditionally run in from late July, early August for the hurricane season.
Right. What is the possibility of crude, going above that $90 mark? Or, on the contrary, do you expect it to somewhere slip below that $70 mark, given the kind of, slowdown in demand from top 3 consuming nations like US, European Union, as well as China?
I don't necessarily think it's going to fall below 70. If it does, then it's going to be, I think, short-lived. So I'm expecting... I'm tilted to the other side. I think that there's more upside than downside risk, and that seems to be really, I think, where a lot of traders are thinking. And I'll be interested to see how it all works forward over the next matter of weeks leading up into July.
Do you expect Saudi to extend the cuts beyond July now, or do you expect
Yes.
them to? You do. So
Yes,
what
I
is the
certainly
medium
do.
term? Right. So what is the medium term outlook on crude? In fact, for the current year, where do you expect crude to settle?
Well, we're 7 months out till New Year's Eve, so that's a very long time frame, and there's a lot of water that has to pass under the bridge between now and then, Nandita. So, look, I won't be surprised for it to hit 90 over that window. I won't be surprised if it went higher, but I just think that there's a lot of time to really take on board and a lot of global themes that need to play out. Rate cycle, what's happening as far as inflation, where do we go with US dollar, and of course what happens from a geopolitical standpoint, and then you're talking about seasonality demand. So I do think that there's it's going to be higher than where we are at the moment.
Right, Peter, thanks a lot on that note for taking our time and joining in this morning. We look forward to having you on the show again sometime soon. Well, with that, let's also bring on board our technical expert for today, Rajesh Palviya of Axis Securities is joining in this morning. Good morning, Rajesh. Extremely positive cues coming in from SGX Nifty above that 18,700 mark as we speak. But, I would like to speak to you about the broader markets, given the fact there's a lot of action in that end of the market. The Nifty Midcap Index hit a fresh high on Friday. What are the levels that you expect on the Midcap Index going forward, and Nifty Bank? Do you expect it to remain around that 43,500 level, or should we expect lower levels ahead of the policy this week?
Good morning, Nandita. So, market is enjoying this upward momentum since last couple of weeks, and almost both the indices are now trading near to all-time high trajectory. Looking at the overall data setup, we believe that this positivity is going to continue further as both the indices are witnessing the buying interest above this breakout level. Looking at the overall data setup, we believe that until Nifty not breaks below 17,500 on a closing basis, it's going to remain in the bullish side only. So one should try to find out the opportunity in the market wherever they get some opportunity in the dips should be used as a buying opportunity in the Nifty as well as in the Bank Nifty. So for Nifty, 17,500 is the key level to watch for going forward. If it's hold that level, then yes, there is a high possibility that Nifty can inch up further higher towards 17,800, 850 mark in the 18,500. If it's hold, then 18,800 to 18,850 could be the possible upward target in the continuation of this momentum. So overall setup for Nifty is on the bullish side, and for Bank Nifty, 43,700 is the key level to watch for. Till Bank Nifty is holding this 43,700, then possibly Bank Nifty can also show further more upside momentum, and then the next target for Bank Nifty is around 44,500 to 44,800 in continuation of this uptrend. In the last week, we have seen most of the beaten down sector, most of the underperforming sectors have shown good buying interest, and it's a broad-based buying action is happening in the market. So it clearly shows that confidence is there on the street, and this momentum can continue further higher. We are projecting Nifty target is 18,750 to 18,850 in the near-term basis.
Right, those are the levels to watch out for on the Nifty. I want to get in your thoughts on Wipro, given the fact that it has set the record date for its buyback to June 16th. We have a query coming in whether or not one should buy Wipro at this level. Pinak Ganguly has written in. And, if you look at the stock, it has gained somewhere around 6.5 to 7% over the last month since it reported its numbers. How would you advise investors to play the large cap IT pack right now, given the fact that most of the stocks have managed to stage some kind of a recovery since the time they handed in a rather disappointing set of numbers for the fourth quarter?
Yeah, so we have witnessed a strong recovery in most of the IT stocks, especially mid-cap IT have done well in last couple of weeks, but large-cap IT also participated in this recovery rally as the broader market is participating now. So IT is also, catching up, and we have seen, most of the large-cap IT stocks have recovered from their recent low. So we believe that, some more upside momentum we can expect in the IT space, and furthermore, another 3 to 4% kind of upward momentum we can see in the continuation of this pullback rally in IT stocks. So from large cap IT space, yes, we do believe that TCS can do well. Setup is looking very attractive on the near term, short term basis. So TCS can scale up further higher toward 3400, 3450. One can buy this stock also. If we talk about Wipro, Wipro is now trading about to its 100-day, 200-day moving average, which indicates that some buying interest and strength is there on the short to medium term setup for the stock. In this recovery process, stock is now giving breakout of its almost 4 to 5 month consolidation range. So looking at the setup for Wipro, we believe that if it stocks holds above 395 level, then possibly this stock can scale up further higher towards 415 to 420, as the buyback window is also going to open in coming weeks. So some buying interest is going to remain in the stock prices. So 395 should be your stop loss to hold your long position. Upside target is 415 to 420.
Right. Hope that answers your query on Wipro. Let's also take up a query on GNFC. This one is coming in from Prabhu and wants to know your long-term view on the stock. If you look at the share price, it hasn't really done much. In fact, it has been in a steady downtrend. If you look at the 1 month chart, down about 2.5% or thereabouts, not much. However, it has been in that downtrend, and it's just about managed to come off its 52-week lows, quite far from its 52-week highs. Would you advise investors to buy into this dip and maybe wait for the long term now?
So Nandita, some profit taking is happening in the stock, but overall, if you analyze the setup in the long term, yes, stock is in bullish trend, but yes, in the short to medium term, some profit taking is happening. Stock has slipped below to its 200-day moving average, but it's still holding the ground above 50-day, 100-day moving average, which is showing that strength is there on the long to medium term basis. So if you get any opportunity to buy this stock around 560, 555, it's a good level to enter again in this stock. So some pressure would be there in near term, but on the downside, you should be ready to buy the stock around 555 or 550 zone. Your stop losses at that time would be around 525. And if stocks manages to cross above 620, then stock will resume its uptrend, and then possibly stock can scale up further higher towards 670 to 680 zone. So overall long-term setup is bullish. Buy on dip should be your strategy. 555. 550 is the appropriate level to enter again in this corrective move.
Right. Let's also talk about the stock of the day, which is, SBI Life. It will be acquiring life insurance business of Sahara India. In fact, the acquisition will be to protect the interest of the policy holders of Sahara, India. And, SBI Life will be taking over liabilities of around 2 lakh policies of Sahara India. And, brokerages believe that this won't really make a lot of difference to, SBI Life's books. So if you look at the stock, up around 3% over the last 1 month, it is moving towards its 52-week highs of 1340 or thereabouts. Will there be more uptrend in this counter going forward? What are the charts saying?
So stock is forming higher top, higher bottom formation on the daily chart, and even if you look at the daily setup, stock is traveling in upsloping channel. So looking at the setup, yes, stock is witnessing some profit taking on the higher side. Stock is now slipped below to 200-day moving average. 1240, 1250 zone is the supply zone for SBI Life. But most of the insurance space has done well in last couple of weeks, and we believe that this stock will also exhibit some more bullishness from this level also. So if you get any opportunity to buy this stock around 1170, 1165 zone is a good level to enter again in this stock. And on the higher side, on the breakout above 1240, 1250, this stock can scale up further higher towards 1350 level on the short-term basis. So buy on dip should be your strategy. If you get any 2-3% kind of corrective move from current level, is the opportunity to buy the stock again.
Right, so that's the view on SBI Life. Let's talk about Minda Corporation. Rajesh, the stock was up 5% on Friday ahead of the board meet that was going to consider a fundraise, and now board has cleared the fundraise proposal. So how should one play Minda Corp now, Rajesh? What's your outlook on the stock?
So very strong price setup across all time frame. Stock managed to give breakout on daily, weekly, monthly time frame. And looking at the monthly setup also, we believe that now stock may continue further more upside from the current level. Also 340, 350 could be the next target on the positional basis for Minda Corp. So overall setup is bullish. Near-term setup is also suggesting that stock managed to give a flat kind of formation breakout on the daily setup also. So we believe that one should hold the position on the long side. 290 should be your trading stop loss, and upside target is around 315, 320 on the trading part. But positionally, you can hold this stock for 350 plus target and on a positional basis.
Right, that's the call on Minda Corp. We just spoke about large cap IT. I want to talk about mid cap IT now, given the fact that we are getting a few queries from that space. Sandeep Hari wants to know your thoughts on Nucleus Soft. Now, this stock, in fact, has been on a roll ever since it reported numbers. On a 5-day basis, it has gained somewhere around 17%. And you also have the likes of Cyient that have seen a great rally come in last week. What are the levels one should be watching out for? Do you think it's time to chase the momentum when it comes to some of these mid-cap IT names?
So very strong price action in Nucleus Soft, especially in last 2 weeks. And now stock managed to give breakout of its multiple supply zone on the weekly chart also. Looking at the overall setup, stock is almost enjoying its all-time high trajectory. We believe that, if you get any opportunity to buy this stock around 1120, 1110 level is a good level to again enter in the stock, as volume action is also picked up in last week. And looking at the price volume action, we believe that, this really can extend further higher from the current level also. So your stop losses should be around 1100, and this stock can further move higher towards 1200 to 1220 level. Because as most of the mid-cap IT stocks are showing good buying interest, and we do believe that this stock can continue further momentum from the current level. Even if we talk about Cyient, Cyient is also enjoying its all-time high trajectory. Series of higher top, higher bottom formation is there. So we do believe that Cyient is also looking attractive. 1420 should be your stop loss to hold your long position. Upside target, possible upside target in near term should be around 1500 to 1540.
Right, that's a view on some of these mid-cap IT stocks. I want to get in your thoughts on the Vedanta Hindustan Zinc duo, given the fact that it's the top brokerage call of the day. Morgan Stanley has downgraded Vedanta to neutral and cut the target price to 280 rupees versus 350 rupees. In fact, it is also underweight on Hindustan Zinc. There has been certain news flow regarding, Vedanta parent raising funds from its rivals. And, the whole talks about stake sale of Hindustan Zinc is also keeping Vedanta and Hindustan Zinc a little on the back foot. If you look at the Vedanta charts, over the last 6 months, it has shaved off somewhere around 13% or thereabouts. Would you suggest more downside on the charts for these two stocks? Should one stay away from these two right now?
So Vedanta is still consolidating in broader range, though there is a dividend play is also there in the stock. Stock has the company has declared dividend, and hefty dividend is already there in the Vedanta prices. So looking at the technical setup for Vedanta, still stock is in consolidation. Broader range is 305 to 270 is the broader range for the stock on the consolidation. Until unless stock not crosses above 305, 310 on a weekly closing basis, it may remain in the range only. Even Hindustan Zinc is also underperforming. If we compare with other metal stocks, most of the metal stocks have displayed some buying interest in last couple of weeks, and even especially in the last week, most of the metal stocks have done well. But these two stocks are witnessing some profit taking. Hindustan Zinc is again, this is the fifth consecutive week where the stock is forming lower low formation. So some pressure is there in the Hindustan Zinc, and we do believe that some more selling pressure is going to remain in the stock prices. 295, 290 is the next level on the downside, where stock may try to find some support buying around those levels, because that's the critical level on the downside. And for Vedanta, 270 is the critical level on the downside. So those who wants to buy the stock at the current level should avoid some more pressure is likely to be there in near-term basis for both the stocks.
Right, that's a view on the Vedanta and Hindustan Zinc duo. Let me take up a query on Hindustan Unilever now. This stock has given somewhere around 6% returns on a YTD basis, but if you look at ITC, it has given a 33% kind of return over the last, in fact, on a YTD basis. Given the fact that ITC has seen a fair bit of rally, would you say the upside seems to be capped now, or do you expect levels of 500 on ITC? And if somebody wants to go in for one of these stocks, which one should it be?
So, especially in last 3-4 week, FMCG sector have done well, and most of the stocks from FMCG have recovered quite well. And if we analyze the setup for Hindustan Unilever, stock is now approaching towards its multiple resistance zone area, which is at around 27.25 to 27.35. If at all stock crosses about 27.35 level in this week, then possibly this rally can extend towards 2800 to 2840 in the continuation of this pullback, which we are seeing since last 2 months. So overall setup for HUL is also bullish on the short to medium term setup. But if I have to choose one stock compared to ITC as well as in HUL, so my preference would be on ITC, because ITC is bullish across all time frame, and stock is forming higher top, higher bottom formation across all time frames. So looking at the overall setup, we do believe that on the positional basis, ITC can continue furthermore upside, and possible target is 500 plus we are expecting on the ITC prices. So ITC is also buy, and stop loss for ITC is 425. HUL is also buy for trading perspective, as near-term setup is bullish, and we do believe that about 2735 this stock can also exhibit furthermore bullishness. So your stop loss for HUL is around 2700 to hold your long position.
Right, that's the view on ITC and HUL. Before I come to your picks, Rajesh, what are your thoughts on some of these stocks like Bharat Forge and RK Forgings, given the fact that, we have data, North America Class 8 truck orders have grown 10% on a YOY basis and have seen a jump of 29% on a quarter-on-quarter basis. So outlook on these two stocks, Bharat Forge and RK Forgings?
So most of the auto ancillary stocks have done well in last couple of weeks, and Bharat Forge has also recovered from its recent low. Looking at the setup, we believe that if the stocks holds above 775 level, then possibly stock can show some more bullishness from the current level, though stock is trading below to its 100-day, 200-day moving average. So another resistance for the stock on the higher side is around 820. 820 is the challenging level for Bharat Forge. If it crosses those levels, then there would be a reversal of this downtrend which we are seeing in the stock prices on the weekly chart. So 820 is your level where you can book profits if you are holding your position. 775 should be your stop loss. RK Forging is looking attractive, though some profit taking is happening on the higher side, but still long-term setup is bullish. So we do believe that if stocks continues to hold above 365, there would be some buying interest in the stock prices in this correction. And again, on the breakout above 410, this stock can really further higher towards 440, 450 on the high side.
Right, Rajesh, with that, we've come to the end of this query segment. But before I let you go, leave us with some stock recommendations for viewers this morning.
So we do believe that, some more traction we can expect in current week on the metal space. So JSW Steel is the stock where we are focusing, and stock has shown good buying interest in last week, and the stock managed to hold above 700 level on the closing basis. So we do believe that if the stocks continues to trade above 700 level, then possible target for JSW is still around 735 to 740. Keep a stop loss of 695. Another stock is from pharma space, that is Sun Pharma. Most of the pharma stock have shown recovery in the last, especially in last 2 weeks. Sun Pharma has given a breakout about 980 zone. So we are recommending here to buy this stock with upside target of 1030, 1040. Keep stop loss of 980. Another stock is from NBFC space, that is M&M Finance. M&M Finance has given a breakout of its consolidation range on the daily as well as on the weekly chart. Looking at the breakout, we believe that this stock can scale up further higher towards 320, 325. So you can buy this M&M Finance also with stop loss of 292.
Right. So 3 recommendations coming in from Rajesh this morning: JSW Steel, Sun Pharma, and M&M Financial. With that, Rajesh, thanks a lot for taking out time and joining in this morning, and of course also addressing all of your queries. Well, with that, we have completely timed out on this edition of Morning Trade. Thanks a lot for tuning in from the entire team. Thanks a lot for watching, and don't go anywhere because coming up next is Opening Bell.